Hello and welcome to the Stock Planner channel. Today I want to talk about UPS, United Parcel Service. It deals with freight and logistics. FinBiz thinks it's going to go up, and I have a different perspective. United Parcel Service was founded in 1907. I didn't know that. And headquartered in Atlanta, Georgia. It offers delivery services for packages, documents, letters, even freight. In my antique business, I shipped a lot of stuff through UPS and on a pallet. It's an international company located in Europe, Canada, Middle East, Africa, all over the world. A good, solid company and a leader in its industry. As I said, I think that UPS will go short. I hope you follow along with this video, because if you do it yourself and follow along, make your own opinions, that way you can learn. You really can't follow somebody else's system. You have to develop your own. To do that, you need to engage. So follow along, see if you think it's going to go up or down, and let me know in the comments. But if it goes in the right direction, one direction you pick, and if it moves 6 to 7% on a $1,000 investment, you can get $66. This is what you're shooting for. And if you do that 4 times a year, you'll have $26. 26% interest. Warren Buffett only does 20, 18 to 20. So let's make some money. And remember, like this video, you don't have to be perfect to win. You don't have to be perfect to win. Before we get started, I want to remind you that you're responsible for your own trades. I'm only showing you what I'm doing. You need to develop your own system, do your own due diligence, and if you do it, you'll win. Now let's get started with UPS, United Parcel Service. Looking at FinBiz at the time of this recording, the Dow has dropped more than 500 points, and it looks pretty red to me. Dow, the NASDAQ, and the S&P 500 all down. Dow down by 2%, NASDAQ 2.5%, and it looks like all the groups and sectors are red. Looking at Simply Wall Street, in my portfolios, I have interest items, emerging markets, 5G stocks, going green, transportation, and here are the stock that I think I'm interested in transportation: Uber, United Parcel Service, FedEx, Starbucks, and I'm going to sort it according to its future score, because you can score this thing by total score, which is best all around, and that is going to come up as United Parcel Service. Wow, good solid company, nice and green. Yeah, that's why. And then all the red ones are down the bottom, but I'm more interested in future, and that puts United Parcel Service in the middle, because I'm interested in going short in transportation at this time, based on the fact that everybody else is going short, and I want a company that's not growing. Let's take a look at that a little further. Oh, there's a big green snowflake. It says it paid a nice dividend. It had some great past history. It's a very healthy company. It has some value, but it's not totally undervalued, and that future growth is not so hot. Earnings grew by 70 or 80% over the past year. Wow. But look at this. Earnings are forecast to grow only 2% this year. It is undervalued, which we like that, and of course pays a dividend of about 3%. High level of debt. There's your competitors. This is on my list, and this one's on my list. It's a shipping facilitator. Now, looking at the price movement, it has been going up, but maybe it's reached its top. I don't know yet. Let's see what the news had to say. According to this Seeking Alpha article, the valuation is not very attractive, meaning that this analyst thinks it's overvalued. This analyst also thinks it's good long-term growth, which I don't think so. Is United Parcel Service using too much debt? According to this chart, its debt is more than its assets, and that's not too good. This is the price to earnings chart versus its peers, and it seems to be okay here. It's not the cheapest guy in town, and its PE is hovering close to its fair PE. Nothing critical there. It's undervalued according to this free cash flow method. Should be trading at 262. That would bode well for the stock going up. The future growth is what we're concerned about, and that does seem to be leveled off. We want to see a little deeper or sharper rise for the outgoing years. That looks a little flat. This is the company. This is the industry. It's underperforming the industry according to the analyst prediction. And this is the kind of growth line you want to see for earnings and revenue. In the past, the company has performed as good as the industry. So it's predicted to underperform the industry in growth in the future. I think that's going to catch up to the stock. Plus, we have the recession pressure, downwind, and I think that is going to put downward pressure on this stock. People are going to cut back. The company is going to cut back if we have a 1 to 2 year recession. Looking at UPS, United Parcel Service, on the daily time frame, each bar is a day's worth of data. I'm showing the indicator of the RSI. This is the 200-day moving average, and it looks like the trend is up. And then we see a sloping down. And now we see pretty much level. And when I see the 200 moving day average level out, I kind of just wait and I look for mean reversions. In other words, I look for the stock price to go above the mean, thinking it's going to come back down. And it is. This has drove up based on retail investors over the last week or two, and has went above what I consider the mean, which is the 200-day moving average. When the 200-day moving average is moving up, then I only take long trades based on the RSI. Here, 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 and here. And each one of those would have been a low. You would have bought there, and you would have made some money. And likewise, when the 200-day moving average is sloping down, I only take short trades. Here, short trades meaning when the RSI goes above the 70 and comes back around, that's the time to take a short. And that would have been right there and there. And now you had to be agile for that, but you had 3 or 4 days to take a profit. Now we have the RSI going above the 70 and come back around. It did come back around. That's what the little dot says. And UPS price is above the 200-day moving average. That's the time I look for a short, and it's level. So that stock may reverse back to its mean. I don't know. Take longs, take shorts. And this is the 50-day moving average, and it just kind of gives me the, hey, this is green. That's when you should take a long. And there's a green there, green. And there's a green. Be careful here. And here, this is 50-day moving average is all red. Now it's green. That doesn't preclude us from taking a short here, especially when it's moved above, seriously above, what I call the mean. Will this stock reverse back to the mean? Let me know in the comments. Hello, and welcome to the... Well, we got the 200-day moving average kind of leveling off. The RSI thinking about coming around, showing a short. The last couple of weeks, it's been a tear up, but I think it went beyond and may pull back. Just like a rubber band, stretched out, but have stretched back. The current price is 206. FinBiz target has it as 210. Some analysts say it can go up to 220. I think it's about as far as it's going to go. The expected move of this stock is 6% to 7%. The 6% move on the upside will put this at 220. This was mentioned before. And a low strike of 192, which is where the 200-day moving average is at, hovering around. A 6 or 7% move while you're investing $1,000 will give you $66, which is a 6.6% return. And if you did 4 of those a year, you get a 24 to 26% APR. Warren Buffett does around 18 to 22 to 20. I think he's hovering around 19 right at the moment. So that's decent. It just got to go in the direction that you think it's going to go by 6 or 7%. And you can do even better with options. Check out my free Discord chat, and I show you an option play for this that'll do even better for the same $1,000. And it just has to get below and keep below 211. This is a intermediate strategy, very easy to implement and manage. I like them, called Broken Wing. Requires you to execute 4 options. And here's your potential payback. And if you keep this thing around 8%, there's your max losses. And it just has to stay below 211. You have no downside risk. All your risk is to the upside. And if we're at the top, we may not be, but if we're at the top, this thing is going nowhere else but down for a little while. So ask yourself, is this stock going up or is it going down? What indicators do you use to determine which direction is going? Use your indicators and then leave a comment below and tell me what you think, if this stock is going to continue on the upside, very good stock, or is going to be pulled back. I'm thinking about shorting. Remember to do your own due diligence and practice. Follow this one. Put it on your watch list. Remember, you don't have to be perfect. If you don't have any money, do some paper trading until you get some. Happy trading. We'll catch you on the flip. Let's have a good day tomorrow. Well,